Welcome to another session. I want to share with you an image I have here on the screen, an image of a chart, okay? And if you look at this image, what do you notice? Okay. Well, on this image, I'm trying to show you a bullish reversal pattern where you spot a bearish fall to this angle and you see this sign here like this. This signifies a bearish reversal pattern to the upside. Okay, yeah, this right here, this symbol signifies a bullish reversal pattern. So when you see a bearish fall to this angle, this is what it means. Okay, so now to notice this kind of pattern, you spot this reversal sign here, and when you see it consolidate and give you a fair value gap, okay, this red candle here with this wick, and then this candle here, this doji here, and this green candle here, the gap between them is the fair value gap. So you can see price retested here, all right, and then continue. So if you miss to take your orders over here, this is another opportunity to retake that orders to the upside. Okay, that is why we don't chase price. You have patience for price to come back and retest, then you take to the upside. Okay, this is how you spot bullish reversal pattern, and then this is how you take advantage of it. Then guys, on this screen here again, I want to show you something. You can see this right here is a sign or a signature for a bearish reversal pattern. Okay, you can see it's been bullish to the upside, and then this red wick form here, okay, with this heavy body, then now this. So this formation here is a potential reversal pattern. When you see this here, you know it's a reversal pattern, so you take advantage of the situation when that form. Okay, so, and this is how you take advantage of that situation. So you wait for it to fall, 1 2 3 candle. The gap between this candle and this candle here becomes your fair value gap. It becomes your gap. So you wait for price to retrade into that. Okay, then you take your orders from this side, your sell orders, because it's a bearish pattern. All right, then price trade all the way to the downside. So if you were aiming to take something from this will be your first take profit. All right, this will be your take profit right here. Okay, so this is something little I want to share with you for now. Let's go and then look at something else I want to share. You can know everything, all right? You can practice as much as you want. You can look at the chart, but this also forms to making you that professional trader you aspire to be. It's here on our screen technology, and one unrealistic expectation. One thing we check off our mind in our psychology. Shouldn't expect unrealistic expectations. Most newbie traders free this offer hot shot trader living one lifestyle in a penthouse, driving, making it rain brings on the edge. It has not come to that episode. Okay, now if you have all these expectations, living the billionaire lifestyle, that millionaire, right? You are new to this, having too much of an unrealistic expectation. Okay, what you want to do is to know how to trade, to understand price first, and to be profitable with little by little as you can. So you understand or you gain that experience to live exactly the lifestyle that some other pro traders live that you see. Okay. So now two, lack of self-control. That also has to do with your trading psychology. Okay. Lack of self-control. Often times able to do the research, back testing. It is sticking to the plan that becomes the problem. Okay. Like I said, it, it is sticking to that plan. All right. You can do everything, but then if you lack your self-awareness, you forget. Like, let's see, look over here. It can be to forget moves when it makes big moves that are just too good to pass up. However, this kind of thinking can be a gateway to impulsiveness and overtrade. Constantly to FOMO can result in a cycle of taking unplanned trades, downs, and desperation. Okay, so let's say FOMO. FOMO is fear of missing out. Okay, when you see big moves in the market, it's not to your strategy. These moves are too good to be true. You are scared of missing out. You lose to those things more. You stick to your plan to trade, you stick to your strategy, and you use it more often. That's why you do the back test to have a solid strategy and you stick to it. All right, because the market has a way of deceiving you, of making you think that these are big moves. You shouldn't be missing out on, and that is where it draws you in and have you. Okay, third one, you can see lack of self trust. Many traders lack that. Okay, lack of self trust. The lack of self trust can also be a root of anxiety for a lot of traders. Following the advice of several trading gurus. Okay, if you find yourself following the advice of several trading gurus and attempt to, then you might want to step back out if you are still doing your own thinking. Okay, successful traders are those who can trust their ability to read the market and execute trades. You see it. So if you don't trust your plan, you don't have self-control, you are not having the real expectation, and you lack that discipline to trust yourself, you are going to fail in the market until you begin to put your psychology in test. You begin to put all your strategies and backtest your psychology as well. Okay, how you feel, how you think before you can actually make good moves in the market. Now, with the next session, I'm going to come with the emotional intelligence. First of all, to master trade, you do the analytical side. Then you come to your side. With what we are beginning of this trading session, and this psychological side, you and then do some research on your meditate more of the time. It's very important. You are going to be positive and happy trade.